Welcome to TradeTheNBI.com. This is John's report is for Monday, the 14th of February. Well, as we talked about it, below that 50%, a lot more frightening situation occurred because you had that dip of magenta below the yellow at that particular spot, and steel started to fade today, which really was not pleasant. We had started to see the rising shakeout that turned around quickly. Some concerns about, well, whether or not the U.S. and Ukraine are going to get involved with a conflict. They've declared that that's happening like any second, so that's definitely a spook to the market. Add into that some of the Fed governors having a little tit for tat on comments about when and how fast the next rate hike comes, as well as a meeting set for Monday. So it's going to be an interesting weekend going into that setup. We popped briefly above the 50% mark, and then it started to trade lower, and it just cascaded from there. There's still plenty of movement in between. It's just, again, those divergent camps on whether or not things are going to be, impacted by the slowing economy versus rising rates. But when you're worried about both of those situations happening, you're looking at what happened in the late 70s with stagflation, no growth, inflation out of control, and the only thing that stopped it was double-digit interest rates, and the Fed has zero appetite to go down that road, at least as far as we know. They'd have to do much more than just a couple of rate hikes over the course of the next few meetings. They'd have to pretty quickly get a tamp on it, because if you're claiming that inflation is only 7.5%, the reality is in the real world it's probably closer to 15-20% or more, depending on the product. And this is a function of that oil setup, as well as the self-imposed supply chain disruptions. From an NQ standpoint, you can see below the 23%, and we don't even have a spike up of white at this particular point. If that happens, then we'd be looking at move towards the 0% pretty darn quick. And this is something gold bugs have been waiting forever for, is that explosion to the upside, people rushing to safety in conflict. Currencies aren't going to help, and neither the treasuries and that, so people want the physical metal, and we expected this to break out to new highs anyway, so it really dramatic. And it's not even completely new highs, it's still got a little ways to go. It's got a little dip down 100%, and it'll pop back up, but it will. And this is why oil continuing to make new highs. And as long as that's the case and there's more uncertainty, this is just creating more of a nightmare. And for no good reason. I mean, just a couple of years ago, energy independent oil in the 40s, and everybody was, content by how things changed. So flight to some safety here, with treasuries jumping after breaking down to new lows, which was expected that we would continue to see that decline, so no shock there. And from Bitcoin's standpoint, again, it's interesting because we do see more of a correlation now between when something starts like that, where we used to see gold sell off in the dips. We're seeing with Bitcoin happens as well. Started to pump, but then boom, faded quickly on that. Nice spike of white, dip of below the 25. That meant the zero was coming, and even when the zero came, there was still no turnaround from magenta, and so that's why I made new lows. Pretty clean from that standpoint. ETH as well, it was pretty good sized volume day from there when you look at it. Dipped down, caught a little bit of a bid, that brought it back up. Pretty clean from MBI standpoint, magenta rising up there, white not making any move over red until a little bit later there. That's when our chart turned red from there, and it just took a little bit longer, and the cascade began. From 50K, took the short from the other day, again took another short, and thought it had a little bottom there. Probably, it wasn't a bad call from that standpoint, but when the red spiked up, and then the pivot lower, that's language that we're adding that would put the stop in there much quicker than that one. Still hasn't caught any kind of a bid at this particular stage, and you can continue with the long algo fading there, as well as 23% dipping, and we're right at those previous algo levels. support at the 43.99 one, the 44.35, which I had mentioned after the big spike in the first place, that was all positive extreme that had to be returned. Now, people will make up all sorts of stories as to why this, why that, but at the end of the day, the algos, they get what they want. Whether it's manufactured or otherwise, we just don't know. It's not really relevant to the fact we could tell what was happening. Let's scroll back to the beginning of this whole scenario here. It's quite a ways. Started off lower at the 59 algo, and then we just pretty much went up from there. Had plenty of decent buys within that setup. What we started noticing was a little bit later, we started getting more weight spikes of the MDI, and then it was just a matter of those beginning breakdowns, and it kept fighting back and forth. But we started getting much longer trails and red leading above too, and those all indicate continued weakness for those setups. And always the tough one where you get the white leading, magenta pops up here and there, but then when you get that big divergent spike where it pops up really far, it's just a matter of waiting for that confirmation breakdown of the magenta. And in this particular case, it just took a little bit of time for that to happen, and you ended up with another white MBI spike. And by then we're still getting weaker because we keep being below the 38%, not even getting to the 50. Usually I expect to move like this first one that went to the 50, and it kept trying to fight back there, but magenta faded quickly. I get a little concerned with these when the magenta doesn't dip below falling yellow pretty quick, so I like to look at that DSC with a clean DSC spread, and orange was falling, and I'm like, oh, am I going to get turnaround in magenta right there while it was still above, but no, in this particular case, pivoted back up, breakdown, went to negative shakeout, and that was all she wrote. That literally led to the cascade, that just blew everything down. And then we just kind of based across there as people were looking for opportunity to cover and get out of those setups. That left plenty of room, and even the little pop still couldn't hold. Despite that, now left opportunity for additional shorting to take place, and literally that's what we got. But there was a lot more activity to pick up some of that weakness, and I think most of these smaller dips you see, they tend to be more short cover setups, and then buy algos kick in and start to take it off. They just could not sustain anything. We started getting the dark magenta candles pretty early on the pivot, get a DSC spread there. Next bar, boom, we're into the full sale that we're actually shooting over one of the things that we moved in. And that took us all the way to new lows because we kept having MBI weight spikes. I prefer them when they're above the 33 level, but even the smaller ones, particularly when you have magenta that dips below 25, you know you're going to get continued weakness within those. It's just a matter of playing through it, and then by the time the end of the day came, boom, they caught a little bit of bid, lift that back up, and again, I think some of that gets optimistic Monday open, pre-trade, but even in after hours, it still fell down a bit. So still a lot of uncertainty when you're getting that kind of movement towards the end, and I think we're going to see more of that continue, and it's perfect for us. I mean, we're seeing it beautifully, so no objections to it at all. As always, though, I will continue to update you on Skype chat. Trade well. We'll talk to you later.